This new bull market is bull marketing today. The S&P is up 0.71%, following more really good headlines out of China this time. We're going to get into all of your news you need to know, including the CPI report that came out this morning and much more. But let me just reiterate, like I did in the last video, if you are bearish right now, you are clearly holding on to some speculation that things are going to get worse from here. At this point, that is the low likelihood odds. It is a low likelihood that the economy weakens towards something like a recession. It is low odds that this trade deal between the US and China falls apart. So you're fighting an uphill battle, and your portfolio is not going to thank you for it. Just to, again, put that out there before we get started with all of this information. Before we do, again, hit the like button and subscribe to the channel if you want unbiased, just facts and my straight up opinions. Well, this is the place for it. And as always, we will be going over your Tesla stock breaking news, and there is quite a bit of Tesla stock news today. It's also quite a big day because you are testing your 100-day moving average. A break above that opens up a larger gap fill level, if you will, up to about that 360 range. Tesla stock is up about 1.4% today, but it is very volatile. Now let's get started with all of your breaking news headlines today before we move into the CPI report. Now, China's finance minister has just said that they will pause the 24% tariff rate on US goods for 90 days. China's finance ministry says the substantial reduction in tariffs between China and the US meets the expectations of producers and consumers in both countries, and it is conducive of economic and trade exchanges between the two countries. And China's finance ministry to cancel additional tariffs imposed on the US products under two later rounds of measures. China's finance ministry also says they will reduce the 34% tariff rates on US goods down to 10% to basically match the US. This will be effective starting tonight at midnight. Now, I imagine, we could see maybe the fentanyl tariffs get paused as well, just so the US and China are both at 10%. Give China some time to kind of crack down on fentanyl before those tariffs go back into effect or stay off. That's speculation. Don't know if that's going to happen. I don't think we need that to happen for this bull market to continue, but it would be a further more positive for US-China relations and for corporate America and consumers in general. Now, Donald Trump also announced a $600 billion Saudi investment commitment in his trip today to Saudi Arabia. Now, US Supercore CPI year over year came in at 2.74%. The previous month was 2.86%. Month over month came in at 0.21%. The previous month was negative 0.24%. So that's still a pretty good number. I mean, if you just times that by 12 times 0.21, you're at 2.5%. That's not a terrible number. Again, if you look at the last 2 months, you're still a little negative if you're averaging that out. So inflation, it's not really a problem at this point. Traders continue to bet on the first Fed cut in September and the second Fed cut in October. Now, if we continue to make progress on inflation, which I think we will, you're going to see more cuts than that, okay? Especially if this trade deal with China gets wrapped up relatively soon and there's more certainty on what tariffs are going to look like, there shouldn't be much holding the Fed back from cutting rates. That's the idea, at least. And this CPI report on a year-over-year basis, this increase today, is the smallest since February of 2021. So let's look at the headline numbers today. So core month-over-month headline came in at 0.2%. Expectations were 0.3%. So that beat on the month-over-month core. Year-over-year, again, came in at 2.8%. Expectation was 2.8%. So not a change there. Headline month over month came in at 0.2%. Expectation was 0.3%. So that was a beat. And headline year over year came in at 2.3%. The expectation was 2.4%. So you're getting close to that 2% target. Again, continuing to make a lot of progress. This should likely allow the Fed to cut rates. Now, the NFIB Business Optimism Index came in today at 95.8. The expectation was 94.5. So you actually came in about 1.5 points better than expected. Now, tomorrow, you don't really have much for economic data. Really nothing at all. You have Fed Jefferson that will be speaking, but this market, let's face it, is really dominated by trade headlines and news that comes out on any given day. Okay. Now, we are going to have some earnings today and after hours with Cisco, Iris Energy, CoreWeave, the metals company, Nextracker, Luminar, Starbulk, Jack in the Box, and FrontView. But let's just be honest. There's only one earnings that really matters, okay? It's Walmart. Walmart is the only earnings that actually matters, okay, this week. Because they're going to tell us what's going on with the consumer, what they see as far as supply chains and incoming inflation. But again, most importantly, the consumer. Are they still out spending money? Back in, the early days of the global financial crisis or great financial crisis in 07, 08, Walmart was one of the first companies to warn about the consumer, that the consumer was slowing down, that, it was getting rough out there, and they didn't see things getting better anytime soon. Stocks sold off on that. People kind of forgot about it. And then next thing you know, 6 months, 9 months later, we're in a recession, and we all kind of pointed to Walmart as being that leading indicator. Walmart has had really good earnings. They've continued to say good things about the consumer. Do they continue to say the consumer's doing okay? Okay, that would be great. Now, there's really been a push away from consumer discretionary, TVs, tablets, phones, iPads, you name it, fishing gear, like just things that are not necessities, right? We all know what those are. We all love those products, okay? People have not really been buying those products. If people start to pull away from even staples, that would be the bigger issue, okay? And that's what we will want to watch. And I actually think markets will respond and react to whatever Walmart says tomorrow morning. I think it is a catalyst for the broader markets, believe that or not. And then tomorrow and after hours, Applied Materials, Kava, Take-Two, Galactic, and some others report. And then Friday morning, just some random companies here most of you have probably never heard about. Now, also in the news today, Trump envoy Steve Witkoff and Keith Kellogg to travel to Istanbul for Russia-Ukraine talks, according to sources familiar with the matter that told Reuters. So Trump today was invited to join these talks by essentially Zelensky, okay? And these are talks to potentially end the conflict in Ukraine. I mean, I think it kind of looks bad on Russia's part at this point. One, there's not really a lot of progress being made on a day-by-day, week-by-week, or month-by-month basis. That's number one. But, India and Pakistan, they fought for 2 days, and the situation got settled. Something is clearly wrong with Russia and Ukraine, that this situation is still ongoing. And I think, again, at the end of the day, Putin probably wants, to open up markets, to, become a stronger country. And it looks like the only way to actually do that is to end the war. Israel's Prime Minister Netanyahu said, in the coming days, we'll go into Gaza with full might. So, yeah, that conflict doesn't look like it's slowing down anytime soon. And in a new poll out today, recession risks will have a bigger impact on the U.S. 10-year Treasury yield than higher inflation, said 19 of 33 bond strategists. But again, with this China trade deal, the odds of a recession have plummeted. In my view, they're less than 30%. Okay, probably 20% odds of a recession this year. I also think with this China trade deal, the odds that inflation is a major issue this year have also plummeted. The odds that the Fed is going to cut rates multiple times this year has dramatically increased. And we can start to actually focus on AI and innovation again and the positive things going on in corporate America. Well, also, maybe global markets do open to U.S. businesses. I was explaining this to, yes, a Trump supporter in person yesterday, so keep that in mind. But I was basically telling them how, like, U.S. businesses in China have virtually no, like, penetration. Unless you're Apple, Tesla, Nike, Starbucks, there's not a lot of U.S. businesses in China. It is, believe it or not, a pretty damn closed off market, right? So what if, let's just say what if, big what if, okay? Like, imagine how strong corporate American earnings are right now already without the second largest economy in the world. What if China's market did actually open up in the coming years? I mean, it's hard to even put like a target on where the S&P could go, where certain stocks could go in that event, let alone other areas in the world, right? That's some of the upside that I think Wall Street is really not paying attention to right now. What these trade deals, the positive that could come over the, subsequent years. It's not going to happen all overnight, but over the subsequent coming years could be very impactful for both China and the US in a positive way. Okay, but we also have the tax bill coming. We also have deregulation. Like, what if no tax on overtime actually happens? What if no tax on tips actually happens? I mean, that's going to give people a lot more money to spend in the economy, assuming that doesn't cause inflation. You're just going to see more activity, okay, which will lead to stronger growth. So I do think there's a very optimistic bull case scenario here that is not being accurately assessed or reflected in markets today. And that is what I am positioning for over the next 6 months, the next 6 years, really. But I do think you will see probably a 20% rally over the next 6 months, which will likely send the S&P close to about that 7,000 level. From current levels, it would be about a 19.3% rally to get to 700 on the SPY. And again, nobody's expecting that. So I think you kind of got to expect the unexpected. Let's now get into all of your Tesla stock breaking news today. And again, the stock is currently at $323 per share. I know a lot of people laughed at the fact that, last week I was saying Tesla would likely be in, low to mid 300s over the next couple of weeks. And that's pretty much where we are right now. And I do expect further upside in Tesla stock, especially as we gear up for the Robotaxi launch coming here in just the next couple of weeks. Lower price, cheaper models coming to market here soon as well. And really just sentiment that got super negative, right? People got very negative in Tesla in a way that I have not seen in a long time. You had a record decline in Tesla stock or speed, right? Tesla fell like 60% quickly, okay? Within like 2 months, it was destroyed. That has never happened before. I do think there is a lot of bears out there that are on the wrong side of Tesla. So first and foremost in the news today, EV startup Slate Auto has racked up more than 100,000 reservations for its customizable low-cost electric pickup truck. The company has confirmed, although the refundable reservation fee is only $50, the company says the truck will start below $28,000 before incentives. So you could be looking at a $20,000 truck here. Now, I don't think anyone particularly likes this vehicle. I mean, like, do you really love this vehicle? The look of this vehicle? No. You love the price point. Okay? And I think that highlights price is everything. If you want to sell me this bag of jelly beans, okay, which, oh my gosh, these things are so good. Like, I got the light blue, the dark blue, the lemon in there. Just bought them yesterday. If you want to sell these to me for $12 like I bought them, great. I'll pay that like a fool. But am I going to go every day? Probably not. You want to sell this to me for $3? I might go every couple days. I don't eat jelly beans that fast, but that's the point. Price determines demand. When Tesla actually does start selling these cheaper, lower priced Teslas, they're going to see a lot of demand. That's the bottom line. Tesla FSD supervised V13.2.9 is starting to roll out to Cybertruck and Model S3 X and Y owners in North America. And Republicans in Congress are looking to end the $7,500 federal EV credit on December 31st, 2025, along with the $4,000 previously owned clean vehicle credit, according to the new bill text just released. Tesla is confirmed to be currently building a large facility at Giga Texas to house Cortex 2.0, the company's second GPU supercomputer cluster installation to train FSD, and more. Elon Musk last night released a new video of Tesla's Optimus dancing. This is a real video and not CGI. Look at Optimus, guys. It is only a matter of time before this thing is working in your local factory or working at your local Mickey D's. Milan Kovac, he runs Optimus Engineering and AI at Tesla. He says more coming shortly. The team has been working very hard in the background, entirely trained in simulation with RL. Many optimizations and fixes have been put in place in our sim to real training code. The cable is there just in case of a fall, not actually holding the bot, since this is an early result, which will get more stable very quickly. Oh my gosh, guys. I love this. Wall Street is so behind the ball here. They are so behind the ball. By the time they realize what Optimus is actually doing, how big this market is going to be, it's going to be too late for them. And also in bombshell news today, Tesla China FSD upgrade approval is coming soon. Now, somebody asked Grok what this means. Thank you for that. Tesla is nearing approval for its full self-driving FSD upgrade in China, allowing semi-autonomous driving features like city navigation. This could boost sales and revenue in a key market where Tesla's Shanghai factory produces over 1 million vehicles yearly. However, strict regulations and data privacy laws may limit FSD's capabilities compared to the US local competitors like BYD that offer similar features for free, adding pressure. As of May 2025, Tesla paused FSD trials due to new regulatory requirements, but is likely close to resolving them. Honda reported a 76% plunge in operating profit and a huge earnings miss in their fourth quarter results. And a new analysis of US government data has revealed that solar and wind accounted for nearly 98% of new electricity generation capacity in the United States through the first quarter of 2025. Morgan Stanley has released a forecast claiming the humanoid robot market could expand to a staggering $5 trillion in annual revenue by 2050, with Tesla being uniquely positioned. Quote, a more cooperative and open trading relationship between the US and China can help accelerate the next phase for Tesla beyond sales of human-operated EVs. I mean, come on now. If you're not bullish on that, I don't know if you're actually an investor or not. Like, these things are going to take some time, but they're coming. And when they come, there is going to be some sweet, sweet tendies printed in Tesla, just to bring back an old term for a minute. Now, in option activity today for Tesla, you have 140 different trades from hedge funds and institutions, totaling about $90 million with a positive order value of 46%. So about neutral, little on the bearish side. You do have 600,000 shares today that are being covered by hedge funds and institutions, so that, my friends, looks really good. Google Trends data worldwide for Tesla does suggest a little bit of an uptrend or uptick in search trend activity for at least the Model Y, everything else remaining quite stable, which I would say is a good sign, but the Model Y went from 19 to 20. Now, if we look at the United States, which is obviously the area that will get the cleanest data from this, same's pretty much true. Things are just stable for Tesla, which should be pretty good considering Tesla's not cutting prices. If there was a demand problem, Tesla would be cutting prices. We know that from the 2022 playbook. And again, as I mentioned previously, you're sitting right at your 100-day moving average. A little bit of rejection, it looks like today around that level. 100-day moving average at $323.97 at the time of recording this video. You're sitting at $323.15, but it is very volatile and anything can happen into the end of the day. Getting a close above the 100-day moving average is a great sign. If it doesn't happen, who cares? I mean, you've rallied a lot, 12% or so in just the last 2 days. If the last 3 days, 4 days, you're looking at like 15% or more. And boom, look at that. You just broke above your 100-day moving average. Tesla stock just went up $1.20 in literally the last 20 seconds. So again, if we close above this, that's great. If we don't, I don't really care. But a close above the 100-day moving average in the very short term should allow for further upside. Again, you have a bit of a gap to fill up to about that 160 level, in my view, from a technical perspective. Okay, 350 also psychologically could be a level of resistance, but we'll see. Let me know what you guys think about all of this down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.